Hello and welcome to this video. Today I'm going to be doing a stock analysis on American Express. Now, if you don't know what they make, they are a bank and primarily a card issuer, and they are huge in the United States. They are also some places in Europe, but primarily in the United States. Now, if you like this video, please don't forget to leave a like and subscribe. And of course, remember, this isn't financial advice. This is purely for entertainment and educational purposes. Now, if you take a look at the graph recently, as you can see, it is very, very pretty. As you can see, has boomed quite nicely. Ever since from back in October, it was at 143, and now it is trading all the way up. It was trading all the way up in 325. So it has been doing quite nicely recently. Now, they also pay out great dividends. As you can see here, they pay out dividends 4 times a year, which is nice because this means you can get a dividend snowball rolling even faster because they pay out more times a year, which means you can buy up more stocks all the time. Now, the company is huge. As you can see here, it is valued at 190 billion US dollars. Now, personally, I love them quite a lot because their main source of income is by cards issuing, and also just they get have a lot, quite a lot of people have credit cards with them, and the American consumer, of course, as many people know, is quite in debt, and they are taking on more credit card debt than ever, which means chances of them gaining more money in the future are quite nice, so the chances of them rising are quite great. Also, just because of their dominance within the card issuing market in the United States, they are just by far the best, and they also have quite great benefits programs with airplanes and hotels and stuff like that. So if you pay with your card, you get a point, which then you can, and then if you have enough points, you can then buy a plane ticket. So it also has an incentive to use your card even more. That is also, of course, a great reason to buy this if you think that those things will attract more customers. And it's just because of how great they run their business. As you can see down here in their earnings, they rake in a shit ton of money and they just keep on increasing their revenue. As I said, as you can see here, the yellow one here, Global Consumer Services. Now that changed colors to this one, Global Commercial Services. Why I changed name, I don't know, but it did, and it's just the same. And of course, they also have global merchant services, which means that if you are a store owner and you need to have cars for yourself and your employees, well, then they get a American Express card. Let's say you work for a huge company in Europe like Siemens, which of course they have employees which need to travel. Chances are they are going to use a company like American Express or Visa or Mastercard. So that would be a company that does that. Of course, this is only huge companies, and I can only speculate which companies does that. And as you can see, they also their main part of their revenue is this global commercial services. I don't know why it's called that specifically, but that is simply their members having the cards. So it's really quite simple. That is how they make their money. As you can see, they are primarily in the United States. There are also some places like the EMA, Europe and Asia and Pacific, but it is mostly in United States. Now the performance of the stock, let's go back to, let's say, 10 years. As you can see, it is quite decent. Of course, we have some years with some hits, but the greatest hit was in 15 with 25%. Besides that, it really hasn't been that bad, and we have great years with very, very nice returns, and also just because, as I said, because of the dividends, as you can see here, they pay out 1.05 dividends. Now, it isn't really that great dividends payout, but because it's often that offsets the low payout a little bit, and it wouldn't surprise me if they increase it in the future, just given how much money they actually earn. Now, if I take a look at the earnings, as you can see, they beat them often, which is quite great. And they don't beat them by that much. They had this one Q2 and 24, but besides that, they are quite spot on often, which I do like when companies does that. Sometimes they like to say, okay, we are gonna earn X amount of money, and then say, oh, we actually made Y amount of money, which is 35% up, and then the stock jumps. Of course, analysts will often take this into consideration, but a lot of companies does that. Maybe they do that, but then they guide quite greatly, even though. Now, if we take a look at the technicals here, as you can see, for the day it is a buy, even a strong buy over here in the moving averages. And for the month, it is still a buy, because even though it did tank last month, it has been quite an uphill way. And as you can see here, we even have a golden cross recently, and the RSI is with us as well, which means that the upwards momentum is quite great. We are also sitting on a current support level right here. So when we have a breakthrough here, then we have to break through this one on 280. And then the next one is all the way up here in 300, and then back up here in what is that, 326. So currently it is looking quite great. Now if you look at the analyst rating on it, we have a ton of analyst rating. We have 30 on it, 10 buy, 10 strong buy, 2 buy, 17 hold, and 1 strong sell. And the strong sell is down by 15%, which really isn't that bad considering it's a strong sell. So very, very nice. A long, strong hold, a lot of no strong buy, and a lot of hold. Of course, many people think this as a rock solid stock to just have in the bottom of your portfolio. So let's say you'd like to take a lot of risk, then this would be a great one to make sure that that risk doesn't become too great, because yes, maybe it's going to fall like we did see on 300 and down, but it pay out great dividends, and chances of this falling through the floor and then being shit is close to none. As you can see, they're also raking in more and more money, and you can also see if we take a look at their future earnings, that was the wrong button. As you can see here on their future earnings, they are just also increasing them, which is very nice. So I do love this company very much. I don't own any stock in them myself, but I might actually buy some now. They are going on the way up, because I do like when the momentum is with us. I don't like the grabbing a falling knife reference. So yeah, it is quite great with the RSI and the SMA with us, so it's a nice stock. Now, if you like this video, please don't forget to leave a like and subscribe, and leave any other comments about videos I'm to make in the comment section below.